Is the roller coaster ride of the U.S. housing market leaving you dizzy? Are you trying to piece together the whirlwind of headlines screaming about plummeting sales, surging prices, and record low supplies? Look no further. In our comprehensive analysis, we cut through the noise to deliver a clear, data-driven perspective of the real estate market that you won't find elsewhere. Leveraging an array of data from Zillow, we've crafted a compelling narrative that breaks down the complexities of the housing market into digestible insights. From the uneven impact of bedroom count on appreciation rates to the unprecedented surge in rental costs, our report offers an in-depth look into the forces shaping the current housing landscape. As you journey through our 8 meticulously designed graphs, you'll gain a deeper understanding of the major trends and intricacies of the housing market. So whether you're a homeowner, a prospective buyer, or a curious observer, this video promises a valuable exploration into the twists and turns of the housing market. So buckle up and prepare for a data-driven deep dive into U.S. real estate. Our first graph estimates the total count of distinct properties sold each month, considering the delay between the actual sales and their official reporting. This data was pulled from the unprocessed data set encompassing all residential properties. In a dramatic shift, home sales have experienced a substantial drop of approximately 35% since 2021. This precipitous decline correlates with the average 30-year mortgage rate's leap from a modest 3.2% in January to a staggering 7.1% by the end of October. This nearly 400 basis point or 4% increase in under a year effectively doubled the cost of borrowed funds for prospective homebuyers. This drastic upswing in borrowing costs has put home ownership out of reach for many, leading to the current downturn in sales. The rapid escalation of mortgage rates has unequivocally sent shockwaves through the housing market, causing potential buyers to pause and reassess the feasibility of their homeownership dreams. If you're a longtime subscriber, then you know I regularly deliver housing market reports based upon Zillow's enormous data set because it gives us an early access to changes in the housing market we don't see from other sites that have a longer flash-to-bang response. If you're not a subscriber, please click the thumbs up like button and subscribe now so that you get all my new content when it is fresh. If you really want to know what's going on in housing, to see and hear the data explained, to evaluate the facts and ignore the hype that is so prevalent online, then subscribe now and I'll keep you in the know. While news of home sellers cutting prices at record rates often makes headlines, Zillow's data paints a different picture. However, it's essential to note that there are lingering questions surrounding the validity of such data. This skepticism stems from the tendency of some agents to manipulate listings, making them appear brand new each time they drop a price. This practice has the potential to distort the true picture of price reductions. While these flaws cast a shadow of uncertainty over this data's reliability, price reduction remains a focal point in discussion in the housing market. According to the available data, the rate of price reductions is slightly elevated compared to pre-pandemic levels. But given the data's potential inconsistencies, this trend should be cautiously considered. A comprehensive understanding of the housing market requires analysis beyond surface-level price reductions. The next 2 graphs segment the market by the count of bedrooms in each housing unit. Over the past 17 years, the fluctuation in home prices has been anything but uniform across different types of homes. In particular, homes with fewer bedrooms have exhibited significantly higher price volatility than those with 3 or more bedrooms. During the market downturn, homes with 1 or 2 bedrooms were hit the hardest, suffering losses of over 30% from peak to floor. This stark drop surpassed the broader market's decline, underscoring the acute vulnerability of these smaller properties during economic downturns. However, the story took an interesting turn during the recovery phase post-2012. The same smaller homes that experienced substantial losses during the downturn outpaced the broader market during the recovery. This dramatic swing from the floor back to peak levels reveals a dynamic resilience in this market segment, suggesting that smaller homes can offer lucrative investment opportunities during periods of economic recovery. The number of bedrooms in a home has proven to be a significant factor influencing the rate of home price appreciation. Zillow's data, which allows us to delve into home price trends since 2000, segmented by the number of bedrooms, underscores this relationship. Over the past year, overall home prices have experienced a modest growth of 2%. However, this appreciation rate has not been applied uniformly across all segments. Smaller homes have taken the lead, showcasing the fastest rates of appreciation. These smaller units are seeing a surge in demand due to affordability concerns or changing lifestyle preferences, increasing their value. In a surprising twist, 5-bedroom homes have defied the overall trend. Instead of appreciating, the value of these larger homes has slightly fallen by nearly 1%. This anomaly suggests the market for the larger homes may be softening, possibly due to shifting buyer preferences or demographic changes. This divergence in trends based on bedroom count demonstrates the importance of considering a property's specific characteristics when evaluating its potential for appreciation. Fears of plummeting home prices have become common in contemporary media narratives, particularly on social media platforms such as YouTube and Twitter. However, such fears often reflect a lack of historical perspective or, in some cases, a deliberate attempt to instill apprehension for other purposes. Indeed, some commenters may genuinely believe in an impending crash, but this belief often stems from recency bias. Overemphasizing recent events or trends can skew our understanding of broader patterns. Taking a long-term view of the housing market is essential to counteract this bias. Looking back over 133 years of home sales data, and this graph was not built with Zillow data, provides a more nuanced perspective. A thorough examination reveals that home prices generally tend to rise over time. Over the past century, a significant decline in home prices have been relatively rare, occurring only during the Great Depression, World War II, and the Great Recession. Only 2 other singular years witnessed modest declines of 0.1% and 1.3%, respectively. Home prices did not fall during the 1960s, the 1970s, or the 1980s, an uninterrupted 32-year appreciation run. It's intriguing to consider what the commentary of today's YouTube real estate evangelists would have been like leading up to this period. Recency bias following the declines in World War II could have potentially led to misplaced guidance in predictions of a housing market crash, like we're seeing today. Despite the occasional downturn, the historical trend of the U.S. housing market is one of resilience and growth. It serves as a potent reminder that the past is a vital guide to understanding the potential trajectories of home prices and a valuable tool to counteract the effects of recency bias. A broader perspective emerges when we delve deeper into the dynamics of home prices nationwide. Zillow's data tracks home prices in a sample of 568 metropolitan areas, offering a detailed view of trends across different markets. While there are markets where home values are experiencing a decline, they represent the minority. The dominant trend across the nation is of year-over-year home price gains. In fact, a substantial 77% more markets are reporting home price increases compared to those experiencing declines. This pattern indicates that despite localized declines, the overall direction of the housing market remains upward. In light of this, the rising home prices merely reflect broader inflationary trends. Real estate is not immune to the forces of inflation. In fact, as a tangible asset, real estate often appreciates in value during inflationary periods. Thus, while rising home prices are destroying home affordability, it should not be surprising. Houses are part and parcel of the economic environment and another manifestation of the inflationary pressures we're experiencing. An equally significant factor contributing to the dip in home affordability is the persistently low supply of homes for sale. Currently, the inventory of available homes in the U.S. hovers just above the all-time low recorded last year. This scarcity is not solely a result of reduced demand. It's also a reflection of a decade-long trend of underbuilding. Starting around 2010, home builders have been constructing fewer new homes than the market requires, and for more on this, you can check out why in the video link below. Consequently, most homes listed for sale are not newly built, but existing homes whose owners wish to relocate. The surge in mortgage interest rates last year led to a significant drop in buyers. However, it's essential to understand that those prospective buyers were also potential sellers. Many of these individuals intended to sell their current homes as part of their relocation process. Thus, the housing supply took a hit when rising mortgage interest rates deterred these individuals from entering the market. Not only were there fewer buyers, but there were also fewer sellers. In over half of the cases, a lost buyer meant a lost seller. This phenomenon further exacerbated the already low housing supply, continuing to the current affordability crisis in the U.S. housing market. Our final graph highlights the dramatic resurgence of rental rates. Before the onset of the COVID-19 pandemic, rents had been rising steadily, increasing at an annual rate of 4% over the 100 months that ended in April 2020, meaning rents were rising faster than inflation. However, the initial pandemic stages brought this growth to a near standstill. As the U.S. implemented eviction moratoriums, the growth rate of rent slowed to a mere 1.4% per year during the first 12 months of COVID. This situation has since reversed dramatically. Over the subsequent 2 years, the growth rate of rent skyrocketed to nearly 12% per year. This explosive growth underscores the profound supply shortage that the housing market is currently grappling with. The shortage of available housing is not just pushing home prices upwards, it's also driving rents to new heights. These synchronized surges in both prices and rents clearly validate our concerns about the housing market's severe undersupply. As things stand, the lack of available homes continues to exert considerable upward pressure on home prices and rental rates. Navigating today's housing market is no simple task. The combination of surging prices, plummeting supply, and soaring rents underscores the exceptional dynamics at play. Amidst these forces, understanding the value of a home, whether you're buying, selling, or simply holding, is more important than ever. With the housing market experiencing such tremendous fluctuations, having an accurate, up-to-date evaluation of your home's value can empower you to make informed decisions. Through platforms like HomeBot, you can access real-time data and analytics offering insights into your home's value, the state of the local market, and broader national trends. As the data suggests, smaller homes have been the front runner in appreciation, while larger homes lag slightly. Most markets are reporting gains in home prices year over year, a clear reflection of the inflationary pressures permeating the economy. Meanwhile, rental rates are skyrocketing, further illustrating the acute supply shortage that the housing market is facing. As home prices and rents continue to climb, staying informed about the market's evolving dynamics becomes more crucial. Despite today's housing market's many complexities and challenges, it also presents opportunities. You can navigate this landscape effectively by staying informed, understanding the value of your property and equity position, and considering the broader market trends. Check out the HomeBot link below for a free home evaluation and stay ahead in this ever-changing market. If you want a better understanding of your home's value and how much equity growth you've attained each month, do what I do. I've set up a free account with the HomeBot app to keep me informed monthly. It's like getting a monthly statement from your stockbroker. Just click on the box to learn more. Please like this video, check out the links below it, and subscribe to our channel so that you never miss anything.